what we are going through is like a small near-term problem. So if we just have to hunker down, keep enough reserves, and hold it long enough, and I'm telling you, we're not gonna see a 2021 again, but a very, very decent 2024 and and even better 2025. That is how I'm perceiving things.
Ladies and gentlemen, welcome to Real Estate Investor MBA. My name is Tejas Gosai, and I've had the honor of helping hundreds of investors achieve the American dream by creating generational wealth through real estate. I've spent the past few years interviewing the most knowledgeable experts I could find in the business to cut your learning time and conquer the hardest subjects in the game. Check out rei.mba, which my team and I have packed with over 75 interviews and free access to our real estate roadmap, webinars, and publications. If you're listening, I am rooting for you, and you're already on your way to financial freedom. Cheers and happy hunting. Today, we have Venkat Avasarala on our program. Amazing guy, tremendous success. I love having the best guests on this program. It's a pivotal time to be able to ascertain knowledge from people who have been through crazy market conditions like we are right now. Some uncertainty in our world can be defeated with historical data, facts, knowledge, making predictions based on that. And Venkat is amazing with how he does it and the pulse he keeps on his market. So he's the founder of Stryker Properties, and he develops 200 to 500 unit Class A, which means turnkey, super beautiful, brand new, nothing to do, just put the tenants in there. Class A market rate apartment communities in DFW, Austin, and Phoenix metros. He also develops raw land in these markets into mixed use planned developments, big, large scale construction stuff. And he has over 1,000 accredited investors who are busy professionals in the IT and medical industry, and they're actively investing to grow their wealth through these real estate investments. So, couple things. Let's break it down. Having an interview like this, one, having that many accredited investors, you're doing something right. The definition of an accredited investor is someone who makes over 200,000 or 300,000 jointly with their spouse, or has over $1 million in net worth, or a couple licenses. It gets you past that accredited investor threshold. Well, those folks can put a lot of capital into projects like these, and they're ground up development, and they're beautiful. They do have a lower return, but there's just a lot less stress with properties like that. And these investors who are seasoned professionals, doctors, lawyers, dentists, engineers, entrepreneurs, they want to park their money in a safe asset and let it mature over the next 20, 30 years. That's what he does. He helps these individuals get into these beautiful assets. Please check out their website for some of these pictures. And please be inspired. I love having folks on that went from 0 to 60 in the past decade, and he's definitely one of them. So enjoy the interview. Check out our website, rei.mba. I have a bunch of tools and a roadmap that can help you learn how to get into the real estate business and reach your financial freedom. So love you guys, rei.mba. We have Venkat with us today. Venkat, thanks for making the show.
Hey, thanks for having me, Tejas.
For sure. You have a very stacked background. Your company has been very busy. I just gave you a long-winded intro. You want to tell us a little bit about yourself, high level, and how awesome you are?
Sure. I'm based in Dallas, actually Plano, suburb of Dallas. I've been doing commercial real estate since 2016. Before that, I was doing a bunch of single families, but commercial real estate in 2016. Bought about 3,500 units in Dallas, Phoenix, and Denver, and still have about another 500 units left, but sold 3,000 units. And then I pivoted to ground up construction early 2020. And right now I'm in the process of developing about 3,000 units, about $1 billion in valuation. Ground up construction is my main focus. I do a bit of land development too.
That's a lot. Let me get rid of this. So big numbers, a lot of activity just in the past few years. I love reading a strong resume. Before we get into some of the crazy stuff, what's your best piece of advice on how to get to become somebody like you or somebody at that echelon?
See, I always work with somebody who have already done it. I don't want to learn it on my dime, and certainly not on my investors' dime, right? So that has been instrumental in my success path, my path to success, where I always worked, partnered, if you will, with who can complement the skill set that you bring to the table. But if you lack experience in a certain area, then you have to plug that gap. That's a big gap to be left as a gap.
No, that's nice. Sometimes folks are first time listeners on the program. I'm always a proponent for do it, do it, do it. But that is the right way to do it. Find somebody who did it. Well, you definitely found some good folks that did some big things. That's a lot of units. How did you get to that scale so quickly? Those projects are hard to find. Those types of investors are hard to find. Can you share some of that?
Yeah. So when I started commercial estate back in 2016, I used to have a full-time job at a large bank in IT. It was a demanding job, but the nights and weekends are free. I have no idea that this will become my main gig. But in 2 years, I quickly realized that the timing is everything, right? The market has been really good, especially coming out of the GFC, great financial crisis that we had. All these assets, everything, they everything is undervalued, right? We know that now. Had I known this like 10 years ago, I would
Right.
have bought more. But I saw that the market has been exceptionally good, right? I mean, it's not just all me; it's the market, most importantly. And then I was able to, like you said, was able to work with some individuals who already bring the experience to the table, which I was lacking at the time. So
Well,
it's
and
rinse and
money. It's not because I mean you had to have a lot of capital to be able to do this.
absolutely.
That's
Till
always
date,
the
I have,
hardest thing.
yeah. So till date, I have already completed about $800 million in projects since 2016, and I raised about $156 million in cash, all small checks, $102,000, $200,000 checks, nothing institutional. But I like the way to do things this way. I mean, investors just heard my message, and I guess they got convinced and wrote those checks.
Well, and after writing the checks, you have to prove the returns, and you have to. What's your
Communication and all that. Yeah.
yeah? What's your structure like? How do you function legally?
So we every single deal that we do, it has its own LLC, obviously, right? And it's a typical LPGP model. And once we use 506B offering, so that means that's why you don't see our ads anywhere on any particular deal or anything. Even at the company level, we don't believe in much marketing. All our investors come through. 99% of our investors come through word of mouth, basically. And we have about 3,000 accredited investors in our database. And when the deal is ready to be funded, we invite them for a webinar. Nobody gets in unless they hear us out. So that where we explain, we take 2 hours of their time and then explain everything that they ought to know before they
That's
make.
before the webinar.
No, that's the webinar
Oh,
basically.
oh, sorry.
Yeah. So 2 hours, they have to attend and suffer through that webinar, ask
Yeah.
questions and stuff like that before they get in. And then obviously, our 506B documents, they'll sign up, and we do monthly updates. We basically send monthly financials and updates. If it's a construction project, we include a drone footage of the construction site. 10 minutes, nothing much, right? But you can actually see that on our YouTube channel. Every month we create a drone footage, throw it on YouTube and send it to them so that they know how their project is progressing.
And communicating with the investors, letting them know what's going on. It's
Absolutely.
different than the stock market where you're investing in a company, you have no concept of what's happening.
Yeah, they can call us, text us, but they are so busy that usually they drop us an email, and we try to get the same day back, but if not, the following day.
Sure. And what about these investors? Where are they coming from? Why are they investing with you? Act like I don't know.
Yeah, absolutely. I could relate to that because back in before 2016, let's say, and before I even did single family, I used to have a very busy consulting job, IT job. It's not just 9 to 5; it's more like 5 to 9, and then weekends kind of thing. So I didn't have any time to research anything to invest, and I'm scared of the stock market at that time because it's all good until it's not, right? And suddenly you find yourself, before you get a chance to react, you're 50% down. God knows when it comes back up. So I used to actually invest where in India, actually, right? Even then, I don't know. I mean, just somebody said, buy that piece of land, buy that piece of land. It was not going well at all. So I quickly realized that, look, we need to invest here because I live here, and US is the best investment market in the whole world. Saudis invest here, Japanese invest here, Chinese invest here, everybody invests here. Why the hell am I going outside the country? This is where the fortunes are to be made. This is the most capitalist country out there. So then I don't want to go into stock market and pay an advisor and all that and get some mediocre services. Then I started aligning myself with some other sponsors. This is early 2013, 2014 time, and made a bunch of passive investments. And once I start, because they take me to this apartment complex, or I can drive there myself, I get this webinar, I get this investment deck, I have a guy that I can call and talk to if I want to
Yeah.
know more. I like all this setup. And that's why I just went gangbusters on that passive mode in 2013, 2014, and 2015 too. And 2016 is when I started actively participating because I want to turn around and come up with deals where other people can participate. And then word of mouth and all that. And I had IT background. So you know how it is, right?
Yeah, yeah, yeah.
Freaking busy. They're just somebody that they can trust to make sense, have the underwriting, not showing numbers in the sky. Okay, here you go, money. So it wasn't particularly hard for me to raise all that money.
That's awesome. No one ever says that. Everyone says, the fundraising is absolutely the hardest part, but creating the returns, and then investors kind of get investors when they start talking about what you're doing. Going back to the supply and demand, that's so much inventory. And over the past few years, it wasn't easy to buy good deals or get a good deal. How did you function in that climate, and what markets?
So 2016 through 2020, at the onset of COVID, that is the period during which I bought properties. And my very first property was $35,000 a door.
Nice.
And then my last project I bought was something like $100,000 a door. And that is when I realized that, right? I mean, these older properties, B and C kind of properties, they need a lot of upkeep, especially in state of Texas. And we have high property taxes, high insurance. The margin got skinnier and skinnier and skinnier and all that. At some point, you know what? It just didn't make any sense, at least for me. Um, and then that is when I stopped doing that, right? And 2020, I quickly realized that, these new product is trading at a premium, and there is a significant shift in our demographic stages compared to 2008 and all that. Now a lot of millennials are not getting married early, like they're getting married in mid 30s, right? So they want to stay single longer. And also more and more people are choosing not to have kids. Single motherhood is on the rise. So there's just ton of demographic shift in the last 10, 15, 20 years. And now all this is translating to people, affluent tenants who would love some amenities and some nice class A properties, and who are not rent burdened, and who's not going to get pissed at me for raising their rent $150 next year, same time.
Right,
So
right.
when I understood that, it was like, you know what, that is the community I want to serve, especially true now more than ever with this inflation. The B and C class tenant, right? They have to prioritize eggs and milk than me, to pay the rent and all that. I'm
Right.
not saying it will be like this forever, but for the foreseeable future, they're stretched. Inflation is faster than their wage growth, and they're stretched. And if you serve that kind of tenants, you will make their problem my problem, right? Now,
Smart.
right? So my heart goes out for them. I want government to help them and all that, but I don't want to bring my investors into other people's problems, right?
Yep.
So that is why I started focusing class A, align myself with some tenured, seasoned um, people in the construction industry, so that I got access to very nice sites. If you look at all my sites, 7 properties that I'm building, they're all 90 to $140,000 median income areas, class A. These are the kind of properties where even something happens with the economy a little bit, you'll be fine. I mean, you won't
Yeah,
be exceptional, but it's not like you're going to lose your shirt and give the keys back.
right. That's beautiful. It's nice the way you articulated that. And keeping happy investors is the name of the game. Happy tenants too. I say this almost on every episode. People think real estate is just money grab, fundraising. No, you're also changing the community, helping tenants, making sure the children of the tenants, they're your tenants too. They need to have a roof over their head. The beautiful part of the economy. So some of those areas that you're in now, tell me about the other construction that's going on there, because if you found a good pocket like that, there's probably competitors and things like that. How do you differentiate?
Basically, we don't want like a super luxury. Like there right now, the construction prices are so high and the land prices are so high. Land came down a little bit, construction prices did not come down at all, right? And this is fine as long as you're building in an area where whatever rents that you're charging in line with the market rents, they can pay that rent. What I meant to say is, let's take example. At the While we're in middle of COVID, we underwrote a deal in Kyle, Texas, 20 miles south of Austin downtown, right on Highway 35. So it's 20 minutes drive to Austin downtown, and my rent, starting rent at least, was $1,400, right? Um, and at the time, if you want to live in Austin downtown, you don't want to drive the 20 minutes, then the rent is $3,000, right? So over the time, what happened is like the rents went up, rents went up, rents went up, allowing these construction deals to happen, right? And rents went up because they're still affordable for that area. That area where I was building, the median income was $90,000. So that will allow them to pay up till $1,800 rents, taking 30% of the income, for the 30% of the income for the rents, and then divided by 12. So that was allowing me to continue to build, to continue to construct. But let's say if I were to start this same project in a $40,000 neighborhood or $50,000 neighborhood, right? Construction prices are still going up. It doesn't matter whether I'm building here or there. Construction, the lumber costs the same, concrete costs the same, labor costs the same, everything costs the same. But that demographic doesn't have the money to give you, and that is how you fail in in development, right? Basically, it's just the project became unfeasible. Charge so much high rent that those cannot guys afford. I steer clear of it by building in affluent areas. As simple as that.
I love your eloquent. It's great to hear it that succinctly. Let's talk about some crystal ball stuff, because some people are scared, some people are excited. Everybody's wondering what's going to happen, inflation, interest rates. Can you give me your today and forward outlook?
So today, what is the biggest problem this country is facing? Inflation, right? So which is coming down, but not fast enough to Fed's liking. They keep increasing the rates. So what I think will happen is we're gonna get one more rate hike, and then they'll stall there, because at which point the Fed runs funds rate will be higher than the CPI and the PCE.
Right.
Today, CPI is 6.5%, PCE is 5%, which is the favored metric, and our Fed funds rate is 4.75%. So we're still like this. Come March 21st, next FOMC meeting will become like that. And I think that is when they'll stop raising rates and then hold it there. Now, what does this do to the demand? Right? I mean, we had a crazy, crazy demand in 2021, even in the first half of 2022, and then from then it's crickets, right? So there's just so much pent up demand building right now for two reasons, right? Because every damn thing is still expensive, and then Fed is freaking everybody out with this their hawkish tone, talking about recession and all that. But if you look, every small dip in the 10-year treasury, suddenly the mortgage, like the other day I was reading an article where mortgage applications went up by 28% week over week. just because there is a 10-15 dip in 10-year treasury. There's just so much pent up demand. Especially look at our this morning, the employment numbers came. Half a million jobs were created in January when they were expecting 180,000. 0.3% month over month wage growth, which is leveling out, but still very good. And then 3.4%, unemployment rate.
Yeah.
So what I'm getting to here is what we are going through is like a small near-term problem. So if we just have to hunker down, keep enough reserves, and hold it long enough, and I'm telling you, we're not gonna see a 2021 again, but a very, very decent 2024 and 20 and even better 2025. That is how I'm perceiving things, and that's why every project I'm doing, I'm sure I'm cutting unnecessary expenses, and then I'm actually staying very liquid,
Okay.
because liquidity is the problem. I'm seeing some people. I sold a portfolio of 2,600 units last September, the September before, actually about 18 months ago. And then what I'm seeing is they're selling them in distress right now, because at the time probably they bought these properties at 3.5% bridge loan without caps, without enough liquidity.
Right.
Suddenly this whole thing turned around. But I mean, it's unfortunate. Nobody have seen that, right? So the distress is happening there, no doubt about it, right? I mean, the person who bought a property for me is listed the property, same property right now for $20,000 less. So
Wow.
$7 million loss on that one property. So I'm seeing that happen, but don't think that is what the market is, right? Some people just got off guard and they're paying for it, and that's all it is.
Love it. Love it. So Q3, Q4, first of next year time, things will stabilize at a decent rate.
Stabilize in the sense, like right now we are stable right now. If you think about it, are you seeing class A properties being sold at 6% cap rate? I'm not. Trades are not happening. Why would they, right? I mean, there's just so vastly different, right? The bid and ask spread. So that is what's happening right now. In order for this to happen, the 10-year has to go back to 3%. It's at 3%. It's at 3.55 this morning. I checked. It went up 15 bips thanks to our crazy employment numbers. But eventually it has to go back to 3%, and then you'll start seeing more and more trades. But construction is getting very hard, because when you buy existing property, you take at least 5 years, 7 year, 10-year, 12-year, long term, right? Which tracks closely your 10-year treasury spreads, right? Today, 350 plus maybe 180 spread for Fannie, you still can manage a 5.1% interest rate. But construction is short term, right? I mean, it takes 18 months to build it. So you go get yourself an 18-month to 24-month, tops 36 months construction loan. Now these track SOFR, and SOFR is tracking Fed funds rate, and today it's at what, 4.75 or something like that. And because it's short term in nature, because it's construction in nature, the banks are adding another 5 to 6 points on it. So what I'm saying is we're looking at 10%, 11%, 12% construction loans at a lower leverage. So unless you have a deal which underwrites really nice at 6.5 cap rate, untrended, it's hard to get something out of the ground. Not saying it won't change by the end of the year, but that is, I have several projects. I have 7 projects. So that is what I'm seeing, talking to the lenders and all that. Some projects, no problem. Some projects, we're having some issues and all that.
How about the projects that you're working on right now? You just mentioned. Can you tell me the size, smallest and biggest?
Yeah, my smallest project, I already built and sold 156 units in Princeton, Jersey last year. Everything else is between 330 units to 400 units range, so 70 to $100 million range. So, and we do that because of the scale, right? Because we don't want to mess around. We want to uh, do a sizable project in a nice area, like Austin. I have 2 projects, both on Highway 35. It's not somewhere, out of somewhere.
Yeah.
It's on Highway 35. One in Round Rock, one in Kyle, and one in Frisco downtown. If you know Dallas, it's in Frisco downtown, right next to the Toyota football stadium. We have a project going on there.
Bravo.
Yeah, a couple of projects in Salina, which is on the tear, right? 125K income. An entry level home is $500,000 there, right? So these are the areas where we're building, and we want to build it big, because at the end I want to attract an institution like a life insurance company or a pension fund or something, because they will come in and even when the rates allow, they don't want to put 80% loan on it. Never. They are very risk averse. 50% is plenty for them, right? 50%. So I want a buyer who wants a lower leverage by design, right? So that they can pay me
That's
the
smart.
best cap rate as possible. And
Right.
they won't buy this and that. They will buy the core, because for them, just like our rental car companies, right? So as soon as the rental car hits 36,000, it's off the lot. They don't want to deal with it. It's off the warranty, right? They don't have time to fix timing belts and all that, right?
Yeah.
Same thing for these institutions. They want newer, nicer product, and the day it starts to show the age, like the HVAC started shutting down, sewer issues coming up, they're out of there
Yep.
well before that. So
Yeah.
you need to give them a new product. You need to give them in a great market like DFW, where the employment story and corporate relocations is very high. And then you want to give them a sizable project. They don't want to write $2 million, $3 million checks. Whenever they buy something, they want to be able to write a sizable check, 10, 20, $30 million, and stay in it for 10 to 12 years. And once they hit the 12% IRR, they're happy campers. And my projects can help them do that. So that's my business plan.
That is just so awesome the way you laid it out. Friends, partners, family, network. How do you stay motivated? You have kids.
I chose not to have kids, but I have two beautiful dogs. They
Nice.
took, yeah, I'm a dog person, so I spend quite a bit of time with them. But other than that, see, again, people say work-life balance and all that. I believe in it, but you don't have to balance it on a daily basis. What I meant by that is an 8 hour, oh, you know what, it's 5 p.m., I gotta go. Nothing greatness can be achieved by looking at the watch, right? Maybe some weeks I do all nothing but work, and a week there, 10 days out there, I have fun. Like basically I traveled 30 countries, and I'm going to Japan and Korea this May,
Nice.
and planning to go to Israel and Jordan this Thanksgiving and all that. So I take 2 3 weeks away from my schedule, and I do not work in those times, right?
Bravo.
Unless it's an urgent call or something like that. But I try to
You
do
take the
one thing.
dogs.
Dogs unfortunately can't accompany me, but I give them vacations in Texas, where I rent cabins and everything.
Nice.
For a dog, what you need is something to sniff. It's a mental stimulation for them, so they constantly need to have new smells. So I try to give it to them.
I love it, man. That's great. So last thing before we got to go. What piece of motivation can you give someone who does not own real estate? They're listening to this show for the first time. They're scared, economy, inflation, unemployment. How do you motivate them to get in this road?
Well, we don't have any other way. I mean, if you see what happened in the last 2 years, the inflation, right? If you think job is going to protect you, you may still have a job. We have a terrible scarcity of labor this time. But if you see that people's purchasing power is eroding, income inequality is increasing, right? Wealth is moving from the lower end to the top end. It always have, but now it's accelerated ever since the COVID broke out. So it all depends on which side you want to be in. Look, money is not everything, but without money, life can be dull, right?
Yeah.
A lot dull. So it's just a necessity, right? So I think if you want to do financially well and provide for your family and all that, it behooves upon yourself to look into something where you can make money in the sleep, if you will, right?
Yeah, 24 hours a day. Rich Dad, Poor Dad. Read the book. All that fun stuff. Awesome. How does somebody get a hold of you, invest with you, or just ask for
They
advice?
can go to our website at Stryker, Stryker properties.com, or they can reach out to me at 281
Awesome. And everything's in the show notes. Venkat, awesome. Thank you for being here.
Thank you. Thanks for having me.
Super knowledgeable guy. It's Real Estate Investor MBA, Tejas Gosai. Check us out on Spotify, iTunes, Stitcher. We love you guys. Cheers. Thanks again, Venkat.
Thank you.